Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys made it through the day relatively okay. In today's action, guys, a very brutal day, a very demoralizing day, I'm sure, for a lot of people out there. What started off as a beautiful morning with a beautifully green heat map. The entire market was pushing higher. NVIDIA earnings were actually holding up, and we got a fairly decent jobs report. Everything was looking very good. And then something happened. Something broke right at about 10:45 a.m. And then the algorithms took over, guys. I hadn't seen this one in a very long time, where it just cascades into algorithmic selling, not even breaking the 12 EMA once, cooling down a little bit for Wall Street lunch. And then they resumed the selling pretty much all throughout the early hours of the afternoon as well. The overall top to bottom swing on the SPY from the top to the low of the day, you're talking about a 3.2% swing after we had good data from NVIDIA earnings and the jobs report. And on the Qs, even wider. You're talking about a 4.3 into the end of the day and into after hours, guys. You're talking about a 4.9% swing, something that you ever so rarely see. The last time we saw something like this happen was in April. The time before that was during COVID. This eerily reminds me of even when Bill Huang blew up his Archegos fund in 2021, and they were forced to massively liquidate a bunch of positions tied into the overall market, and the order flow just cascaded into more and more and more and more selling. So what exactly happened today? Does this mark the official end of the bull market? Are people very nervous? Is it just a natural correction? We're going to talk about all of that in today's video. We're going to run through exactly what happened today. What are the plausible scenarios moving forward as well? And we're going to run through a bunch of statistics and explain kind of the reason behind all of that automatic selling that happened all throughout the session. Thereafter, we'll take a look at our technical analysis, guys, on the SPY, the Qs, and your major market rundown. See how we're shaping up on some of the indexes. We have some bounces in the after hours, but not many. Moving forward, we will also take a look at our big tech list as well, because big tech got absolutely washed today. This entire list was very beautifully green to start off the day. And man, did the moves ever become more and more violent throughout the day to where everything ended up red. And sadly, your entire heat map, for the most part, except for Walmart, which had pretty good earnings, ended up in the red. So we won't be covering earnings today. I'll save those for tomorrow. Today, we got to talk about price action. We got to talk about positioning, and we also got to talk about the just overall shape and landscape of the market right now. I think that matters a lot more. At the end of the video, I will not be going over the biggest gainers and losers of the day. Everything got washed. We've been talking about this list, the high beta names, the high volatility names, and why it may not be the best proposition to heavily position into them. I'll be bringing up a lot of these names throughout our analysis, but I won't be spending time on this list. I'll probably be going over them in detail tomorrow. But today, we're going to try to keep it short and sweet, because the positioning matters so much more than me just calling out certain levels of interest for certain stocks. You guys probably already know those. It has to do with the monthly retracements into respective monthly EMAs. No matter what chart you're looking at that's been overextended, whether it's Micron, whether it's other things, guys, you really have to watch out below. And any short-term trades at the moment should probably be taken off of the table, because the market environment is just not suitable for that. Long-term investments, sure. Possibly some leap call options, building some positions slowly with very long expiries, such as December 2027, sure. But any short-term swing trades, guys, there's just a lack of market clarity, and now, additionally, a lack of market structure to support any long-form trades to the upside. So without further ado, let's jump right into it. The S&P down 1.5 today, the Qs down 2.37, but as I said, it was the intraday swing and the lack of supporting bids all throughout the morning and then in the late stages of that afternoon that really were kind of synonymous here with big algorithmic selling, guys. Big algorithmic selling all across the board. No supporting bids. Everybody was just getting out of the way. And uncertainty did play a large part in that. Uncertainty factors that have been building truly over the past month and a half, which, by the way, we did highlight over here. You remember I made like an almost 2-hour long video, which I never do. I mean, some of them are long, but none of them are 2 hours. I spent 2 hours describing the problems that the market was facing and why the uncertainty was building somewhat like a pressure cooker, and why it all may come undone shortly if we weren't able to solve some of the concentration issues and some of the macro bearish narratives as well, such as your government shutdown, such as the soft jobs creation, such as the consumer data points that we were watching, such as the private credit issues as well. And now we have a few more elements in the mix too. The Qs down massively as well. Take a look at the heat map here. Nothing pretty much survived. It was a massive flip. This entire heat map, guys, was bright green this morning to start off the day, and then 10:45 rolls around and we started unwinding slowly and then a lot faster. Big tech taking a big bath today. NVIDIA, unfortunately, after their beautiful earnings, holding the gains overnight, holding the gains early in the morning. Well, sadly, NVIDIA with a massive retracement from its high to the lows of the day, 8+%. NVIDIA swung $400 billion to the upside and then $400 billion to the downside. Massive move on NVIDIA. You're talking about $1 trillion in market cap almost that swung in either and both directions. On to financials right now. Financials also not holding up very well at all. The banks kind of getting washed. And then you also had healthcare coming down as well. Even though healthcare has been resilient, it did not survive a day like today. Only Walmart was a bright point in the market whereby they met their sales estimates for today in terms of same-store sales and also gave decent guidance, hinting that the consumer hadn't been changing spending patterns recently, but we will tackle those earnings tomorrow when we spend a bit more time on things like that. But today is going to be a whole lot about sentiment, the charts, and how to properly position, just because I want you guys to focus on that moving forward, especially those of you that are trading the markets actively, right? Now, industrials in the bottom half of the market, also not much action down there. In terms of your one-day relative, guys, you can see that only consumer defensives helped by Walmart were higher. The entire rest of the map right here, lower on the week, lower on the day, lower as well on the week. We've been noticing these cracks, right, on the 1 week's and 1 month relative performances. It was very tough to sustain broad market activity, and as a result, we continue to be weak. Whether you look at the short-term performance or even the 1 month performance, as we are now well into weekly consolidation in the markets. Weekly uptrends have now been lost on some of your major indexes, so it has to be notable to us. That's the first time that it's happened since the month of April. So this time indeed is a little bit different, and as a result, we have to pay attention and become a lot more patient, especially on our trades. So what exactly happened to today? Well, I'll kind of tell it to you guys as a bit of a story, because the story has different parts. And as you guys know, I like describing the market as a big puzzle that you kind of have to try and solve. And that does help you with your positioning overall. Now, we are currently in an extreme fear environment at a 6 print, but I'll remind you, last week we were additionally in extreme fear at 18. Even though last week we got an okay bounce, start off the week with a government shutdown, it just unwound and unwound and unwound. And we were looking to NVIDIA earnings and the jobs report to bring some clarity and renew the bullishness in the markets. And it did happen very early this morning, but then everything unwound, which I do believe to be a structural behind the scenes issue in terms of some leverage in the markets. We'll get into that right now, but still right now, extreme fear. So we've been saying that it's good to be buying into your long-term portfolios. Many of the big tech names, many of your favorite high quality companies are now off their highs by 15, 20, 25%. And those are very good pickups for long-term portfolios if you're DCAing with your paychecks. But when it comes to trading, guys, we need to confirm, as I was hinting at yesterday and the prior videos as well, you need to confirm the daily uptrends if you want to build some meaningful longs. If not, you are just buying the dip with no end in sight type of thing, right? In terms of the news that came out today, guys, well, the data was kind of awkward. We got better average hourly earnings, which was good, 3.8 versus 3.7. And the non-farm payrolls came in for September at 120,000 versus 50,000 expected. Nobody was expecting this, and it was a little bit strange, especially when the data was supposed to be a little bit soft coming into the fall months, as many companies had done layoffs, and also other companies weren't really hiring too much. As Jerome Powell said during his September speech, they were noticing a no hiring, no firing environment. So that was a bit curious, and you can already tell when we start off the morning, we got that good jobs report. The market loved it, and it took it in stride. However, it didn't really make that much sense. The data for October will be posted in the month of December, by the way. That's what they said this morning. So people, as soon as the White House said that the data would be released in December for the month of October, after them saying it wouldn't be released at all, it kind of gives people some pause, right? Leaves a bad taste in their mouths. Unemployment rate uptick here from 4.3 to 4.4%. Now, this is justified by the fact that more people who are currently not participating in the labor force are now participating, but are still out of work. And as a result, your unemployment rate rallied a little bit here, not because you have more and more people being laid off. At least that was the justification that we did get from the BLS. Now, moving on to the story of the markets today, right? So it all started a few weeks ago when we talked about this initially, the concentration into the Mag 7 and technology names, where they reached record high market caps and record high allocations of the S&P 500 after a beautiful month of September and an even better month of October, which are supposed to be seasonally weak, I'll remind you, right? October and September is usually when you get consolidation. We didn't get it. It's just been straight up from the month of April, and the markets were very easy. So coming into November, December, expecting even more gains was probably going to be challenging a bit, especially when you were faced with concentration risks. Additionally, we had commented on this. After the non-farm payrolls event in September, something started to break, and you can feel it in the market. It was only AI versus everything else. Consumers were not performing too well. Dare I say even healthcare, financials were kind of flat. Additionally, too, the bottom half of the market was nowhere to be seen. Staples were nowhere to be seen. It was only AI, and you might remember the theme during September and October. It was quantum computing. It was the neo cloud providers, the new kids on the block, the Nebius Group, right? Iris Energy, Cypher Mining, companies like that, right? All of those names were rallying 2-3x off of their lows, and nothing else was participating. And a lot of semiconductor plays, such as Micron, such as Broadcom, such as a whole host of other companies, Oracle after their phenomenal earnings, AMD, all of the open AI deals were running super hard, but the rest of the market was not. That's when we noticed a big problem. When this divergence started to magnify, I was saying on the channel, you really got to be careful, man, because market breadth was not looking the best. You'll see here percentage of stocks above their 20-day EMA. When we kind of made these determinations, it was like at the start of the month, right? And it was very low in terms of market breadth, yet the market was at all-time highs, which fired off the Hindenburg omens. You guys remember that? Percentage of stocks above their 50-day EMAs was also very low when we posted that video. It's now even lower. The breadth has not really recovered at all, and you're even losing the percentage of stocks above their 200-day EMA, now below 50% of all stocks, which does indicate that you're heading more, or rather that you are about to head more into a bit more of a broad market sell-off and even take some off the top of your favorite technology names. Not to mention the technicals on a lot of technology names were super stretched on their monthly moving averages, right? I mean, you look at Micron, it's all the way up here. What's it doing all the way up there, right? Names like SanDisk, right? SanDisk, all the memory rush, right? Names like SanDisk were like all the way up here. What the heck's it doing all the way up there, right? And so many other names super extended from their monthly moving averages, and we were commenting about why that was a problem, especially in a market concentration environment. Moving on a little bit further here, guys, this as well is something that we were talking about. There was way too much leverage in the markets. It was such an easy trading time from the end of tariffs in April all the way through the end of the month of October that people kind of overcommitted on margin, deploying the most amount of margin versus the gains in the S&P in a very long time. You'll see that even better on this chart right here, to where the margin debt grew at a faster pace than the S&P as people continued to pile on their bets late into September and October, believing that this was the AI bull market, the best one of all time, and that the only possible direction for the markets was higher. And when we made that video 2-3 weeks ago, I was telling people, wind down the margin, start freeing up some buying power, because the breadth indicators and several of our bearish narratives were starting to be at play. And as a result, you should not be driving your Ferrari in the rain at full speed. You guys remember that? So margin debt levels were a problem. So all of these guys are adding. They're adding to the pressure in the markets, adding to the pressure. Yesterday, prior to the, or rather about a week or so ago as well, we raised this concern too, that the fund manager survey cash levels were dropping from to 3.8% from 3.9%, which is some of the lowest levels. It just showed you that a lot of people were fully deployed in the markets. The perfect opportunity to set somewhat of a correction in motion, right? Not a full-blown bear market, but at least just take some off the top when you're super extended away from your natural moving averages, when you hadn't touched the 50 daily EMA in like 6 months, when you'd barely grazed the 12 weekly EMA in 6 months, although in all prior bull markets, it was a lot more natural, right? So the markets were very extended, no matter which metric you kind of use there. And lastly, this one right here, sorry if it's a bit tight here. We noticed earlier before the NVIDIA earnings that a lot of fund manager surveys were coming out and saying, well, listen, so many people think that big tech is spending too much money on AI. Obviously, in the past 2-3 weeks, that's been highlighted ever since your big tech earnings. A lot of our favorite big tech companies had really good earnings. But because they reiterated the CapEx spend, well, the market didn't really like it. Take a look at Meta right here, down a tremendous amount since their earnings. Names like Microsoft, which had really good earnings, additionally coming down as well. And so many other companies reiterating CapEx and or raising debt capital, which it doesn't sit well too much with the markets overall. It also doesn't help that for the past 2-3 weeks, Michael Burry has been talking nonstop about problems that he sees with the AI bubble. And Michael Burry, I mean, everybody has seen The Big Short, so it's not as if some random person comes on the internet and says, you know, we're in an AI bubble, right? Michael Burry obviously commands a certain degree of respect for the people that follow him, and he did get the last Big Short correct in 2007. So, you know, when something like that happens, it just gives people a little bit of psychological pause. So all the charts that I've described previously give people some technical indications of pause, but you could also feel the sentiment dry up after those beautiful Palantir earnings where the stock didn't move higher and sold off right when Michael Burry started talking about the markets again. Robinhood, another fan favorite name, they had phenomenal earnings and only came down. Rocket Lab investors coming into their earnings, they were already down. The company posted okay earnings and now down some more. And a lot of people who made a ton of money on these names all throughout the fall, NBIS, Iris Energy, possibly people who had been participating in this CoreWeave rally as well, we're seeing their gains plummet and plummet and plummet. It's not very easy psychologically, right, in the markets whereby you're seeing a lot of your favorite names that are either so high that you feel like you're chasing, or the names that you've already been in with some gains are now starting to move down further and further and further. So the sentiment in the market has been getting more and more sour, more and more uncertainty surrounding the AI trade. And not only from you guys, but also from the institutions deeming that the big tech companies are spending a bit too much money. So there was a lot of froth in the markets in terms of investor sentiment, retail especially. There was a lot of froth in the market in terms of margin leverage that was being utilized. And additionally, now you got the extra catalyst, right? And this is the infamous Japanese carry trade. You might remember this one from August of 2024 when it took the markets down in a similar fashion. If you guys don't know what the Japanese carry trade is, it's very simple. It's almost what you guys do, but with an extra step sometimes. Basically, you just borrow Japanese yen. You use the Japanese yen to exchange for US dollars. And then you use all that borrowed money to invest in US equities because the US market traditionally outperforms the Japanese market. So they try to go for the carry trade and try to put their yen to work in the form of dollars, in the form of US equities, and bring the money back when they make a profit. Now, this is all good when your 10-year Japanese yield, the rate at which they borrow those yen, is still relatively tame, but it's been upswinging violently. The other thing that's been upswinging violently in the past few weeks because of the Japanese fiscal stimulus packages has been the Japanese yen. This is the US dollar versus the yen. So obviously when this chart goes up, the yen gets weaker. If you want to look at a different way, you can just do the opposite, JPY versus USD. And the last time the Japanese carry trade blew up was right about here, when the yen levels get very low. And when you have a bit of a spike in interest rates, guys, well, that does two things, right? Not only did the yen that you borrowed become less and less valuable a little bit, which is fine when US equities go up, because then you have more purchasing power in US dollars that you can bring back to the to the yen, right? However, it becomes a problem when you're doing this on leverage. Your borrowing rates on margin go higher. And additionally, you start embarking into a correction that's not manufactured by the Japanese carry trade leverage. No. It just gets accelerated by the Japanese carry trade leverage. So when you bring in the big volume and the big volatility, you will cascade selling pressure from all sides, not only from the US side with all the concerns we previously described, but also potentially from the Japanese side as well. And you're talking about very big trades that need to be unwound. Japanese 10-year was moving significantly higher too. And last but not least, guys, you got some confusion from the Fed, right? So today, some people were saying that it's because of Lisa Cook's speech that she was talking about early this morning around 11 a.m. that the market's kind of unwound. She was warning about a possible stock market decline if the macro data were to decline as well. But you know what the problem with that statement is? Fed members have been saying that literally for about 2 months. Almost every single time they speak, they are always warning about certain things. She started speaking at 11 a.m., but as you'll notice, the velocity of the selling started at 1040 and continued all throughout her speech and did not alter at all, right? Usually Lisa Cook does not have the power to move the markets, swing the SPY 3.5% top to bottom, and the Qs 4%, right? You would expect Jerome Powell to possibly have that power, but even he cannot do that unless you kind of count the time where he kind of pooped on us back here in the December 18th meeting. I'll remember that forever because it was the day before my birthday and I was on a beach in Miami wondering why the Qs were down 3.5% after a Fed meeting, but I digress, right? So the justifications for today from the Fed members speaking, no, that's not it. But what we do have amidst the Fed right now is a lot of dissent. The Fed members do not agree with what they should do with the rate cuts in December. And as a result, your rate cut odds have been plummeting and plummeting and plummeting, right? And when you get an awkward jobs release like today, it just once again pushes back on the possibility of a rate cut in December. So as you'll see, all of these uncertainty factors, uncertainty around a few things at the same time, right? Uncertainty around the AI trade. Now, NVIDIA earnings helped reiterate that the AI trade was alive and well. But if you look on social media after NVIDIA posted their earnings, tons of people had problems with the, accrued revenues that they were reporting on their balance sheet and their cash flow statement, or their income statement rather. They had problems with the inventory buildups. And people are just very skeptical about NVIDIA's numbers, the same amount of skepticism that people have been having with a lot of the big tech numbers recently surrounding the depreciation cycles, all that good stuff. So people are asking a lot more questions now than they were perhaps 1, 2, or 3 months ago surrounding depreciation cycles. Eventually, essentially right now, everybody is a data analytics expert, right? And everybody knows how to read balance sheets and income statements now, although nobody was paying attention to them back then. Obviously, now that Michael Burry is raising the concerns, everybody's paying more attention, even though you can easily disprove a lot of his claims. But I digress. That's a side point. It's the psychology that matters, right? People are just not believing in the AI trade to the same effect that they were believing in it all the way back here when everybody was super bullish. Now you can see some dissent amongst proponents of the AI trade overall. You still have a lot of believers, but keep in mind, you guys watch financial stuff every single day. You might watch my channel, you might watch other people's channels, but what has the media been saying for the past month and a half to the average person? They've been saying bubble, 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 bubble on TV every single day, every single afternoon, every single night. So the people that don't have time to do a lot of research into whether or not these claims are true, they'll just look at a stock chart. They'll see that we're super extended, that they've possibly missed out the rally. They'll hear that Mag 7 has been contributing to most of these gains, right? And they'll just start selling stuff regardless, not even looking twice. So keep that in mind. The sentiment erosion right now and the psychology around that trade has been soured. The technicals were stretched. We got a bit of a data dump, or rather a rate cut reset after the government reopened, and we were not sure if we are going to get the data or not. The jobs creations, well, this one is still a big asterisk next to it, right? Because nobody's quite sure if that data is actually real, what's going to be coming for us in December, and whether or not the Fed's actually going to agree and cut rates. Consumer anecdotal experience is also very poor. Everybody feels very bad about the economy, the K-shaped economy where, the top 10% has all the wealth. The bottom 90% is struggling to get by because of the inflation we've had over the past 5 years. So that aspect is soured as well. You also have some private credit and bankruptcy issues in subprime auto lenders and things of that nature, right? Commercial credit loans as well. Now, we haven't had too many large events, but as the more you add to this list, guys, right, the more uncertainty builds in the pipeline today. And if you want to add another one down here, well, now you get the good old Japanese yen carry trade as well, which just adds another bearish short-term catalyst. So when the bearish short-term catalysts become louder and louder and louder, people tend to forget your long-term bullish tailwinds. The fact that AI is indeed contributing to a strong GDP. The fact that we are in a rate-cutting cycle and that we do have an end to quantitative tightening in the early stages of the month of December. The fact that we are still at record unemployment levels. The fact that we are still lowish on the inflation prints. Trueflation here, 2.42%. Obviously not a problem at all. Moving on further, we did have extremely strong earnings, which I brought up on the channel. Of all the companies that reported in the S&P, 82% of all of them reported positive EPS, and 77% of them reported positive revenues. But obviously, people don't remember that, right? It's been a while. It's been like 2-3 weeks. People are focused on the now. And when they see big tech companies just coming down and down and down, you would assume they had bad earnings. They didn't have bad earnings at all. All their earnings were amazing. You have the AI megatrend, which is now coming into question as an AI bubble. And then you have a tremendous amount of tax cuts, but people are not focused on this anymore. No, this is very small, right? This is where all the noise is right now. And as a result, this is what people are focusing on. So when you throw in a bit of volatility, some people will say the Japanese carry trade. Other people, such as myself, do believe that some big players possibly had to be liquidated, whether or not some of that poured in from the crypto market, which has been kind of front running this decline for a while, whether or not it came from our Japanese counterparts, whether or not it came from some firms on Wall Street having to very rapidly deleverage when they started bringing on the volatility. A lot of people were like, no, that's it for me. I'm getting out of the way. If we can't hold on to NVIDIA earnings and we can't hold on to a positive jobs report, maybe indeed we are going for the, ever so rare, at least this year, weekly consolidation and full monthly retracement after being extended. Some people wanting to protect gains. Retail must have been absolutely defeated today, seeing such a green market pivot to the red, and in a big way, man, it just leaves a psychological impact on all people. Selling leads to more selling and more selling and more selling. So that is a rundown of what transpired today. As you can see, it's not one single thing. Arguably, there was not one big piece of news today. It's not as if President Trump tweeted something here, or Jerome Powell said something here, or we got a bad piece of data somewhere there. Nothing. It was just a combination of everything. And the combination of everything final broke the camel's back, to speak in terms of an analogy. So that is kind of what happened today, what transpired, all the reasons behind it. Now, in terms of where do we stand? Because now we're losing some key structure levels, which the bulls needed to hold on to. And when I saw this structure break as well, unfortunately, I had to wind down a lot of my volatility plays and a lot of my short-term trades because the thesis changed, sadly, right? We were looking forward. My thesis was embarking into these NVIDIA earnings. If we can hold the weekly 12 EMA and hold the weekly higher lows, you might be able to save the sentiment with the AI earnings, with the NVIDIA AI earnings, right? Save the AI sentiment trade, reignite people's fire behind that trade into a lot of different plays that have been sold off a lot recently. But also, if the jobs report were to come in a good fashion, well, it's not going to do wonders for the rate cut odds, but at least people could get behind the fact that you're not heading into some form of an unemployment recession. Two things that would have provided some really nice lift. When that didn't happen, and you cracked right here, and you flushed with that amount of selling, right? Well, that's when the thesis kind of comes undone. You just got to have to look at things and say, listen, it was a good thesis, made an attempt at it, but sadly now it has to be wound down. That's what I did moving into the actual charts right now. Very simple. Daily downtrend, lower high is now set with highs of today. Daily downtrend sadly continues. As I was saying yesterday after the NVIDIA bounce in the after hours, I was saying a bounce is always a bounce until you confirm a trend change, either engulf and change the trend up here or give us a two-step process. That ability has now been lost, and we're now losing the China lows. The reason that's important, guys, is because this is your weekly higher lows on the S&P. We have not lost the weekly uptrend in 6 to 7 months. So if you lose this, it's notable to us, right? It means that you may need a bit more time to consolidate and get through all these bearish issues. Your MACD has also crossed for the first time in 6-7 months as well. You have to pay attention to all of these medium-term structural shifts. It just means that you have to trade a lot slower, right? Your company selection has to be a lot better, and it's not as easy as just a shotgun buy everything approach back here. Cross your fingers, and it's probably going to go up. Doesn't work that way anymore, right? Unfortunately for most people who've been trying it in the past few weeks. Monthly also, we are still extended from the 12. If you ask me where max pain is, I would assume that max pain is a casual retest of the 12, something that the markets usually do in normal bull markets, not a turbo stimulus check 0% rate bull market, but even a nice bull run like October 2023 through 2024. We had several times where we came back. This was tariffs, arguably a little bit overdone, but we're extended right now. There's no way around it, right? You were very extended, monthly overbought conditions. This is going to be healthy consolidation. At least you have a bullish backdrop of tailwinds to be able to rely on and say, no, it's probably not the start of a recession, but it is probably going to be a pretty choppy period of consolidation and sell-off overall. So if you lose this area into tomorrow, we'll see if we can get a bounce, guys. But even if you get a bounce, it's going to be tough to undo this candle, especially one that closes at the low of the day with such strong sentiment. Any bounce from here looking for a lower high and give the bulls the bears another attempt here to smash through and head to the lower area, which will be 641 to 630, which is going to be the 26 EMA, which we do test, you know, momentarily. Sometimes when times get rough. Here was the last time the Japanese carry trade unwound with the non-farm payrolls. I'll remind you, last August, 9.5%. So can we sell off on the S&P 7 to 10%? Sure, of course. Usually you get one of these once every year and a half. You're supposed to get far more 5% pullbacks per year than we have gotten so far, but it was just a very easy moment in time back there. I don't want to scare anybody. I'm just giving you guys context and just see the charts for what they are, right? Don't think like, well, if I just cross my fingers and pray hard enough, it's just going to rally here. But don't also think this is the beginning of the end, right? You just take it one at a time. You always have to compare and contrast these short-term bearish narratives, and are they strong enough to derail your long-term bullish fundamentals? What NVIDIA gave us yesterday, guys, is the confirmation that the AI trade is here to stay for the next 2-3 years. It's going to be choppy, as we can clearly see, but they posted ridiculous numbers. And we know that big tech a few weeks ago also posted ridiculous numbers in terms of free cash flows, in terms of net margins as well. But people's sentiment will sway. Our job especially is to identify maybe some mispriced opportunities in the near-term future as we sell off even more, potentially. Moving on to the QQQs right now. The Qs, not too bad in terms of price action, but a very clean daily downtrend and flush of the China lows. This is very important, guys. We did two things. Not only did we lose a couple months worth of support right there, right, since the month of September, but also you lost your weekly higher low. That's not very good, right? This is the first loss of this weekly uptrend in 6 months. So this time is different, meaning that if we go for a bounce, it's probably just going to be for a lower high into resistance and maybe for continuation to the downside until we can find some sort of a price equilibrium when the sellers run out of gas and buyers actually feel that they're getting good discounts. Moving on further, next line of defense support, 581 to 575. And if you ask me, where's Max Payne once again? Max Payne probably decidedly is down here at the 12 EMA, 550 on the Q. So you may have to forfeit your thesis of rallying into the end of the year. I don't want to call it just yet, guys, but if we do fully complete monthly consolidation, end of the month of November into December, I'm not going to say it's going to be straight line down, but maybe it could just be choppy, right? A little bit choppy. There's going to be some up days. There's going to be some down days as well, but maybe we just trend in this 12-monthly EMA, which would be a very nice top to bottom sell-off on the Qs, man. That'd be like 13%, right? Things that we've seen before when times get a little bit bumpy in terms of short-term sentiment, a lot of froth, a lot of margin in the markets right now. Maybe the best thing to happen is a bunch of liquidations. Hopefully you guys are able to save a lot of your buying power, man, and wind that stuff down. I've been talking about it every day. I don't want to sound like a doom and gloomer, right? That's not what I try to do in the videos, but I do try to give you guys perspective and how to properly position while still having a bullish leaning stance. But I mean, you can have a bullish leaning stance. It doesn't mean you have to be fully committed to the markets at all time, right? There's times to put your foot on the gas, then there's time to just take some off the table, sit on a lot of cash and just wait for those opportunities. Because I too want to call this sentiment bluff in the market. Trust me, there's a lot of my favorite tech companies and a lot of other of my favorite companies that are dropping lower and lower and lower. And I've identified some levels that I want to play them in. So when they come there, I will be playing. And you guys know those levels too. We've been over them for the last few weeks. Moving on to XLF financials right now. Financials also getting washed, possibly continuation of the daily downtrend, continuation of the weekly downtrend, which we've been in prior to today. I'll remind you, even the last few days, it was a weekly downtrend. And now you're going into further monthly consolidation. They got to put a stop to this soon, guys. 50 is the line in the sand. Below that, you would have to come back all the way down here for an even more full monthly retracement to the bottom end down there. Still a lot of space over the higher lows, right? But that would be a pretty full retracement. So if you lose this, that is probably where we're heading for some financials. And the banks have a lot to give back, man. Don't look at the monthly timeframes on the banks. You might get a little bit of vertigo, right? Where's JP Morgan? This was one of the things, right? We had bullish short-term timeframes, but I was saying, man, short-term swing trades are fine as long as you're expecting to take profits. I got in here and I took it off at the all-time highs. Short little swing trades because you knew that this looked like a ticking time bomb, right? These banks never usually get that extended from the 12. And when they do, you tend to have a bit of corrections, right? So can the banks fall a little bit more? Absolutely. We have a lot of space. I'll show you a lot of charts today, man. I'm telling you, you got a lot of space on a lot of stuff to come down a little bit more and just flush people out and turn people bearish. And that's when you guys know when the stars line up, when they flushed out the leverage, when your favorite names are down 20, 30, 40% from the highs, retail is throwing in the towel, which binds you. If you look at comment sections, Reddit, Twitter today, people are throwing in the towel, man. Throwing in the towel pretty quickly this time. Fear and greed, it can stay down here. You remember during tariffs, it was under 10 for like a month? So it can stay down here. So don't use this, but you'll see the sentiment start to crack further and further and further. And that's when you'll know to start nibbling and nibbling and then increasing the exposure a little bit and just buy all those people's bags who are panicking. XLV Healthcare, I mean, it's been doing a really good job of holding up right here, but line in the sand, 151.14, crack this. That's a daily downtrend. That'll also be weekly consolidation. We were noticing the bulls were struggling in the past few days, right? Struggling with this area. And if market breadth were to unwind as it did today, well, you may just be heading a little bit lower. Don't count on names like UNH and Molina Health and, CNC and all those guys to save you. No, they're nowhere to be found. It was largely just Eli Lilly and a few big names lifting. So if Eli Lilly gets tired, names like AbbVie, right? If they get tired a little bit, well, healthcare is just going to come down because some of those pharma names, they've been doing all the heavy lifting. Mind you, a lot of the medical devices names have also been doing a lot of the heavy lifting over the past month and a bit. So healthcare, not the broadest sector right now. If you do pull back, coming down to support, 148 to 145 is where I'll revisit possible entries. Moving on to semiconductors right now. This, we already knew, right? Daily downtrend. We were looking for the NVIDIA bounce. And I was saying yesterday, where we were in the after hours, I clearly said yesterday, guys, from where we were on the bounce for yesterday with this low, right? It was a nice 618 bounce, but a bounce is only a bounce until you confirm the trend change. Sadly, now bulls completely getting unwound here. You can view this as also possibly an incremental head and shoulders too. Weekly flushing the 12 EMA, and you might think, well, why was there nobody sitting there? Well, the reason there's nobody sitting there, guys, is because we didn't really set much support. Here's the China lows right here, right? In October the 10th, there's not much there. There's really not much there. When you break this right there, 330, you're basically just off, right? There's a few players here, but that's it. But the biggest time frame, which I've been focusing for you guys the last month at this point in time, is the monthly time frame, man. Look how extended you are from the 12-month EMA. You need to pull this one down, in my humble opinion. The next big area, the institutional area, the monthlies here, you're probably looking at under 300. Call it like 300 down to about 280. This little pocket right there, that's probably where you get a whole bunch more buyers if this sell-off does continue. I would love to just tell you guys, like, yeah, just go all in, buy the dips right here. I can clearly see that this is all a scam, and you're probably going to make a ton of money if you just long the markets from here. But as we know, guys, are any of these bearish narratives easy to get undone? No. And do you think people are more encouraged today or more discouraged after today in terms of retail participation, right? And even the institutions, they're gonna bid slow, man. They don't step in all at once, not in front of a freight train like we saw today, right? And retail, if they see their darlings like NVIDIA and all those names, Palantir, Robinhood, start to see them unwind in a massive fashion. People's year-to-date gains right now are going down and down and down and down. People that were up a ton on Robinhood earlier, right? Now that one's down like 30% from the highs. People that were up huge coming to Palantir earnings. All of this matters a lot in terms of psychological perception. And when you, when you come at the king and you don't miss, like they just did NVIDIA dirty, right? Bringing this one down after earnings, huge 15%. You'll just look at this and you'll be like, dude, like NVIDIA, all these Palantir reported the best earnings everybody's ever seen, and the stock goes down. Robinhood reports the best earnings that people have ever seen, it goes down. A lot of big tech names reported great earnings, the market just doesn't care. Amazon gets unwound just the same, Netflix gets unwound, Microsoft gets unwound, Meta gets unwound. The only one that kind of holds up is Google, but then again, after their earnings, they haven't really done much until they released Gemini 3. AMD also, right? People being very bullish up here. We're going to 300. You see this one unwound. Look at how fast, man. Lisa Su gave insane guidance. Literally just last week. Look how fast. We were 260. You're already at 200. That's 22% in like 2 hours. You know what I mean? So sentiment is just going to further erode, which is why it's really tough to say like, yeah, it's a bottom. Just go buy, guys. It might need a little bit more. You might need a bit more monthly consolidation, which is normal. And I'll be waiting for that normal to come into effect to be able to strike. Moving on to the IWM right now. So the Russell also flushing in a big fashion, man. Look at top to bottom on the Russell. Top to bottom, 4.2% on the Russell. This one's been in a daily downtrend, so should be no secret there. Lower high is set directly into resistance, and now moving into support level right here. Too much momentum. I'm not touching this at all. 232 down to 225 would have been fine if you just came down here soft, like if the indexes would have recovered, but not small caps, and you just back test it again, maybe that's fine. But big steamroller worth of volume, not really interested in participating. I'd rather let the markets kind of sort it out. But the bottom end of support down here is 225 in line with the 12 EMA. So I'm not going to position on the Russell. I was looking for some divergence. I was looking for the S&P to move a bit, to kind of correct in a bit of a softer fashion, the Qs as well. But for the Russell to get taken down more, Sadly, they've all kind of came down at the same pace. So now it's really just tough to kind of just sit here into support and say, yeah, it's support. Yeah, it's a breakout retest. I'm just going to blindly buy at this level. Unfortunately, when things become a bit more unclear and when they unwind a portion of the bullish short-term thesis, such as NVIDIA recovering the AI trade and the jobs data that's being released is going to recover the macro trade. Well, when you don't see that happen, guys, you're just going to kind of step out of the way and just wait for them to find equilibrium on a lot of this stuff, right? Moving into defensives were up nicely because of the Walmart earnings, of course. Defensives could be a nice bit of a position trade here in the event that there is some rotation back to some of the value names. Nice support right now, but I wouldn't go too heavy, but this could be a nice area to position. Utilities also coming down, but we know utilities also suffers from the AI trade because a lot of utilities, the price action is associated with the AI trade. So I would not be surprised if utilities have to consolidate, maybe them too, have to go into a bit of monthly consolidation, rejoin the 12 EMA, low 80s. If I find utilities down here, low 80s, if we don't want to play them individually, it might be a nice area for some leap call options because one thing we do know, these data centers are going to be needing a lot of power. But another thing we know is that we haven't lost a weekly uptrend in a long time. The bulls are still working with a lot of space here, but now we are consolidating more and more and more and more and more. So perhaps we have to go for the full monthly unwind as well. And real estate, I mean, real estate's been a very bumpy sector overall, whether you're looking at REITs, whether you're looking at mortgage companies, whether you were looking at the home builders. We were supposed to get the rate cut in December, and as a result, real estate was perfectly positioned to possibly get some bounces here. Now that the rate cut is off the table, well, the real estate trade has officially been delayed by at least 1 month before the Fed reconvenes, right? As a result, these real estate names have just not been performing too favorably. I'm still a big fan of the real estate trade into second half of 2026 and 2027 as well, but it might just be a very challenging trade, to say the least, moving forward. Moving on to the VIX. Look at this move on the VIX, man. The move on the VIX was absolutely nuts. We start off the morning in a very healthy fashion. You can see here that we were down 17% on the VIX back to sub 20, but then they kicked on the afterburners, man. They turned on the algos and they crushed us 46% from the bottom to the top, which is also the same thing as we saw back here. Now, the volatility doesn't need to keep going up for the markets to keep going down, right? This is just a measure of velocity, in another word, or the amount of people that are buying insurance versus the amount of people that are not. And when you see a big velocity like this, it doesn't mean that the VIX has to keep skyrocketing every single day, right? It can stay flat or slightly down, and the markets can go still a little bit lower, right? It's kind of just like the RSI. It's relative to the most recent move. So that being said, pay attention. Still a nice opportunity to sell some puts on your favorite companies. I know some people just don't want to do it right now. That's fine. But at the VIX, at these levels right now, you're getting some really good distance on some really solid companies. If that is how you're looking to play the markets right now, have a look at that. Yields moving a little bit higher, but not doing too much, guys. I mean, no, sorry, on Thursday, yields, the 10 and 20-year yields were down significantly from their tops, right? The bond market's going to move all over the place. There's just too many moving parts in the bond market right now, guys, in terms of speculation, in terms of Fed outlooks, right? In terms of different various amounts of data, in terms of the demand for overall bonds versus gold. Like, it's just such a complex trade moving forward. We'll just have to wait to see what happens with the rate cuts. Maybe bonds will catch a fear trade in the event that the markets keep going down, but I wouldn't get my hopes up for it. It hasn't been really acting like that all year so far. Bitcoin cascading liquidation breaks. Obviously, this one separated from the S&P a long time ago, man. Maybe you guys have seen the charts on Twitter. You know, it was tracking pretty well, right? With some variance, of course, right? But it was tracking pretty well. Direction, right? Up. Bitcoin is up. You get some consolidation on the Qs, which is the blue line right there. Consolidation, tracking. Here's a little bit of divergence, but they catch it up really quickly. But like, what happened here, right? What happened here is crypto just started falling apart. After the liquidation break on October the 10th, crypto has just not been the same. Tom Lee was on CNBC today talking about some sort of algorithms are broken within the mix, and some market makers are still busy liquidating positions and hunting for stop losses and just liquidating retail leverage, et cetera, et cetera, et cetera, et cetera. At the end of the day, you know that crypto moves with supply and demand, and it's a sentiment trade as well. It is a risk on assets. When the market's completely flush, sure, are people perhaps using MSTR and BMNR as hedge trades because they can't find the liquidity to hedge massive positions in the crypto DeFi market, and as a result, they're using stocks as proxies, the Bitcoin ETFs, etc., which then puts more pressure on the overall crypto landscape? Yes, guys, yes. But at the end of the day, right, that could all be true. But the one thing that is also true, guys, is that we've been in downtrends, right? It's very violent right now, or very oversold. But is it a good time to position for the short term? No, we've been saying that, right? There's no swing trade longs until you reclaim the daily uptrend, which is something we haven't had for over a month at this point. Weekly bears remain in full control right now, not oversold. And now, sadly, you've gone well beyond the average retracement size right now, right? The average retracement size should stop the markets between 50 and 618. If there's big things happening behind the scenes, well, you know, I guess that's just the way the cookie crumbles at this point in time. It's now a 80% retracement, which means a full V shape from here is somewhat unlikely. There is also no support all the way down here onto 75. There just really isn't, right? Just look at these charts. I would love to tell you guys there's something coming up soon. We're coming into the final level here. You crack this level, 85, unfortunately, guys, there's really not much until 75. So is Bitcoin a good long-term buying opportunity? Yes. But is it a terrible swing trade long right now? Also, yes. Is it a good short? Arguably no as well. You're very late, but Bitcoin is just a trade that you're going to have to wait for the environment to kind of clear up right now because it is also a sentiment and leverage trade as well. So they're going to have to wait to flush a few more people out, in my opinion. Moving on to Ethereum right now. Ethereum also, you know, down on the day. Ethereum was down like 6.32%. This trade is just completely unwound, right? You know, front, center, backwards, sideways, whichever way you want to call it. It's been a weekly downtrend this entire time. We've unwound at not one, but two levels of support at this point in time. Desperately trying to hold on to that 2,800 level, but also this retracement size is getting pretty deep, man. Really deep, right? It's a 618. You blast past the 618 and come into the 25s, man, you guys can pretty much forget the V-shaped recovery. More likely than not, it'll be a long, drawn-out, maybe two-step monthly recovery process, but the long-term thesis of Ethereum is currently still in motion, but any swing trades, guys, should be taken off the table. And if you're stuck underwater heavily in BMNR, stuff like that, you know that it's not going to come back quickly, right? So I hope all of you that are in BMNR or other things like MSTR, I hope you guys have a long-term thesis on these companies because they will not recover quickly. It's going to be impossible to make these just act as if nothing ever happened, right? You can recover from here, but it's going to be a long and drawn out process. It's going to take weeks or possibly a few months to get some favorable sentiment and favorable price action back into these. So if you're holding any of that stuff, I really hope that you have a time horizon that's not measured in days or weeks. I hope your time horizon is measured in quarters or years to get the cycle appreciation for Bitcoin, right? So that being said, that's everything for the overall markets and crypto. Let's move into big tech. So moving on to Apple, the last of your market-leading bulls, essentially. Apple's been holding up really well, but may not hold up the test of time if this selling continues at this point. Equal lows, but they're kind of losing them right now. If you fall a little bit further, guys, that is going to be weekly consolidation for Apple, something that has not happened in over a month. 12 EMA on the weekly is going to be first, and then next up, obviously, the full monthly retracement, 250 to 245, which is going to be the pocket that I might be exploring for some Apple trades. But as of right now, not touching Apple. It's not because it's not a good company, but it is fairly extended right now on the price, but also on the fundamentals as well. Moving on to AMD. AMD, big, massive sell-off on AMD, guys. Daily downtrend clearly underway. Weekly consolidation as well, clearly underway, and they needed it, right? But this is a nice opportunity. If you are a long-term AMD shareholder and you believe in the AI thesis, I'm not forcing you to believe in the AI thesis, but if you like AMD as a company, coming into some really nice buying opportunities, man. 200 all the way down to about 180 is a little pocket. You're going to come into some of these tops right there and also come into the curling up of the 12-month EMA. We were very extended on the price. We are very extended on the weekly RSIs. We are now correcting that overall, and this will leave a lot of people defeated. A lot of people that were sitting on big gains do not want to see the gains get taken back, of course. But if we do get that top to bottom, I mean, we're already down 22%, right? Goes a little bit more, and you will see people throw in the towel on this phenomenal company that just a few days ago was trading. Right now, if I redo this valuation around 200, AMD is going to be trading under a 1 peg and like an 8 price to sales almost, a mid-30s price to earnings ratio. And this is for a company that just gave us phenomenal guidance for next year and the year after, arguably, right? Insane EPS growth in the future and insane revenue growth. So if you believe in what AMD and NVIDIA just told you, then you would be a buyer down here. But once again, I'm not forcing you to buy any shares. That's just kind of how I see it. I will personally be picking up some more because my time horizon on my long-term shares is measured in years, not in days, not in weeks, not in months, no, in quarters and years, going for the AI expansion trade and the expansion of AMD as a player in that trade. Moving on to Amazon right now, this as well might leave some people completely defeated. Huge earnings push. Finally, after months of doing nothing and lagging behind the market, Amazon was higher. Now, you might be left feeling completely defeated, and we're not even daily oversold RSI. But What has changed with the company since those earnings? Absolutely nothing, only the price, right? So that being said, when it's a price issue and not a company issue, then you can know that it is indeed a good opportunity to be adding some shares to your long-term portfolio. At the end of the day, it is Amazon. However, it's a big daily downtrend, and any bounce will just be for a lower high into resistance, 228 to 238. It's going to take them a while to get through this again, guys. But if you're a long-term shareholder, then you should not be thinking in terms of days and weeks. I know everybody wants to see the fast gains on everything that they buy, but now it's just not the time for that, unfortunately, anymore. Weekly higher lows are here, 211.58 coming into support, 217 to 211. I will be buying some Amazon in this location and also selling puts under the market, as this is a very high-quality name for me. And I do not mind playing the wheel on high-quality, high-conviction names. Monthly, full give back as well, back into the 12 EMA, significantly off the highs right now. That's a nice 16% pullback. Has it always been a good proposition to buy Amazon 16% on a pullback in an overall bull market? I mean, yeah, you can go back in history all the times that happens, right? In the context of nice bull markets, it is a very good opportunity to be buying some of those dips overall. So that's what I'll be doing on Amazon. But unfortunately, no more swing trades from me on these companies in the short term because the price action is just not favorable. Moving on to Google right now. Google, arguably another one of your last standing bulls with Apple overall. That being said, they tried to breach 300, couldn't get it done again today. That's twice in a row that they get rejected. I mean, Google, man, do you guys really think that we're going to go into possible further market consolidation and Google might just stay up here? Maybe, but more likely than not, they may just have a nice weekly retracement, which could bring us back down to 250, 12-month EMA, which could be a very decent and attractive buying opportunity. Need to cool down these weekly RSI levels. And also, this monthly chart is very, very extended, guys, right? So a lot of the other monthly charts that we've been pointing out, Micron, companies like SanDisk, right? Companies like this, companies like ASML, which had a tremendous rally, super extended on the monthly timeframes. Companies like LRCX, super extended on the monthly timeframes as well. Anything that is a monthly chart that looks like that got blown up out of proportion with people on leverage, people chasing gains all over the place, and even institutions, guys, just bidding up the price, not setting any support levels to the upside, just gap up after gap up after gap up. September and October, monster rally pushing companies hundreds of billions of dollars in market cap higher, right? That being said, it's currently being unwound at the current time, so you got to see it for what it is. So Google might also be unwound, but the fundamentals on this company are super strong, which means I will be a buyer if we do go for that full retracement. Meta, surprising enough, right? Today wasn't down so much. They've already deleveraged this trade for the most part. Daily downtrend continues. We are still deeply into oversold conditions, and as a result, with oversold conditions and a low valuation on a forward multiple, you're looking pretty good for some buys. I'm not saying this is the bottom. We could easily drop one more level if the markets, give it to us, right? 535 down to 493. So I am a buyer of Meta in this entire range because my long-term buys are measured in years, not in days, not in weeks. This is a better opportunity to buy now at these fundamentals than arguably it was up here. So I'll be adding to my position. Any short-term swing trades on Meta because it's oversold and I'm going for a bit of a bounce trade? No. If you want to see a swing trade from me on Meta, you got to give me the daily uptrend first. And we spent all of yesterday's video going over why you have better hit rates when you wait for daily uptrends instead of just trying to call bottoms, right? Moving on to Microsoft right now. Microsoft flushing daily downtrend, loss of months of support since the month of July. It has to be notable to you, challenging the 200-day EMA and almost in the context of daily oversold conditions. I don't know how long I've been waiting for this trade. I kept saying it on the channel. I'm sure while I was saying it, people were like, no, that's not going to happen. Same thing like Netflix, right? No, we're never going to come back and test the 12 EMA. Not possible, right? Microsoft's just too solid. Microsoft was a previous example of what happens when you rally nonstop, don't set any supports on the way up, and get a little bit extended on the weekly timeframes, on the monthly timeframes, but also additionally on your forward valuation. Eventually, you are going to have a bit of a retracement. Now, Microsoft is finally coming into my desired pocket, 470 down about 450, and I will be buying this location if you come down into it, and also watching how the price reacts. If we cascade a little bit more, maybe then we can find a couple swing trades, but as of right now, price action to the downside a bit too strong, momentum a bit too strong, and let's be honest, we are sitting in the middle of absolutely nowhere. The only thing that's here is a 200-day EMA, right? So not my favorite trade overall. Moving on further into our Netflix position right now. Netflix, same thing, back testing resistance right there, 116 to about 111. They try to go for the daily uptrend switch, and sadly, you got the Uno reverse card pulled on you. So the weekly downtrend sadly just continues. It was always a weekly downtrend, no secret there, and it was always monthly consolidation at the same time. Now we're in the buy zone. My pocket, 110 down to about mid-90s, is the pocket in which I want to be playing this name. Netflix, phenomenal company, already down from the all-time highs, 21%. Has it been a good buying opportunity buying Netflix when it's down 20% from local highs? Usually it's always been the case to find Netflix at those prices and it being a buying opportunity. So that's looking good. Around the 110 mark, they were at a 33 forward price to earnings, a 1.7 peg, which was not so bad, all things considered. And as a result, Netflix is going to be one of my favorite trades moving forward, but it has been out of favor for a while. The next big area of support is down here, 98 down to about 91. Moving on to NVIDIA right now. NVIDIA, very, very unfortunate, man. This is a discouraging move, right? A very discouraging move overall, especially when you see that posted on the chart as well, right? Well, it was already setting up like that. Let's be honest, right? It was already there. Now they give us an extra weird shoulder, right? So NVIDIA, right? Very, very awkward move on NVIDIA. 195 down to about 180, 8% move intraday. Can it just stall here and move to the upside? Yes, but I'm pretty sure a lot of people are just not convinced anymore, at least maybe not in the short term, right? I'm still a big believer in NVIDIA in the long term, but the short term is going to be dicey. The support range is here, 184 down to about 178. If you lose this, sadly, the bounce was nice, but that's a lower high, man. You lose this, daily downtrend continues. It's been in motion for a while. Earnings tried to save. We unwound. If you unwind a little bit more, that'll also be maybe a loss of the weekly higher lows, which are 178. Higher lows, 178. You lose that, it's going to look like Palantir, which I'll show you in a couple moments here. And you might just head to the lower range right here, 170 to 165. What is down there, you might ask? Well, I'm glad you did ask. What is down here is going to be the monthly 12 EMA. Has it been a good buying opportunity to pick up NVIDIA during its monstrous rally when it gets close to the 12 EMA? Yeah. And so I'll be waiting for it patiently. And if it does come down there, I will oblige. No swing trades on NVIDIA for me. But if we drop one more level, I will be a big fan of playing that one. Moving on to Tesla right now. Tesla also with the huge pop and drop this morning. Top to bottom, that is an 8% swing, rejecting perfectly from our resistance box that we labeled right there. 427 down to 416. Daily downtrend possibly still underway. If there's too much momentum, you're probably not going to hold the 380 either. You might just be heading a bit lower to, right, weekly consolidation, weekly downtrend, and also the monthly line of defense, which is down here, 360 down to 336, your 12 monthly EMA, which the bulls, although in a volatile fashion, have been playing defense for the large part over the past year of trading, all throughout Tesla's controversies and things like that, right? So that being said, I would love to tell you that this is going to hold on Tesla, but when the whole market, guys, is showing you either daily downtrends, weekly downtrends, or both into monthly consolidation, well, probably if it looks like monthly consolidation, if it smells like monthly consolidation, well, maybe it actually is monthly consolidation, despite what some people might think. If you lose the daily uptrends, guys, it's very simple, right? You lose a daily uptrend, it takes days to get back, right? Arguably like a week or 2 weeks. If you lose the weekly uptrend, well, then that takes weeks to get back. So how long does it take to get back? Weeks and weeks, right? And when that happens, you go into monthly consolidation, and to regain some highs, sometimes it could take a few months. Maybe we just V-shape everything. I don't know. But the probabilities do favor monthly consolidation at this point. And as a result, that is kind of the impression that I will be left under for the moment. Look at a name like Palantir, right? Palantir flushing its support, 170, and a daily downtrend simply continues. The bulls tried to save. They were almost there after NVIDIA earnings, but sadly, top to bottom decline on Palantir today, 11.3%, right? So even despite Alex Karp trying to salvage the image of the company after Michael Burry kind of put it into question right there, right? Unfortunately, the stock is finally embarking, and I say this as someone who has Palantir shares. Eventually, guys, you got to set the monthly higher lows, right? The last time they did a weekly downtrend was there. No loss of the weekly uptrend, except for now, loss of the weekly uptrend, right? And now monthly consolidation as well. Where are we heading? 150 down to 140, line up with the 12 EMA. Palantir's done this several times, so it should come as no surprise, right? But the farther that you run away from it, the faster and the harder that you can fall back into it. Palantir is already down 25%. And believe me when I say, man, I haven't touched this stock for trades or even adding some shares for a while. But what they have done since this time that they were at 140, right, a few months ago, they gave us 2 quarterly earnings that showed that the growth was absolutely still insane. So now that we have more fundamentals and a better price than back then, maybe I'll be interested in picking up some shares again. Moving on to, but what's happened right now, nice correction here on the monthly timeframes. Couple more, SOFI down 7% overall in the markets. Daily downtrend, right? First time since right there. And SOFI's just been struggling with this range, guys, refusing to push the price higher. We try to break into the mid 30s. Can't get it done. You've now unwound this entire weekly uptrend. It's been a weekly uptrend this entire time. And now you challenged and broke these lows. One more day of red, and that will be a loss of the weekly uptrend, aka the start, rather the continuation of monthly consolidation. Very healthy. Look at this monthly move, man. How much is that? In 7 months, what is that? A 4x, right? From 8 to 32? It's a 4x, man. Like, how much more do you want in a straight line, right? Natural monthly consolidation, 25 down about the lower 20s is where we're heading more likely than not. Big support coming up soon. This is an area, a nice little pocket while the 12 EMA catches up, that I'm going to start bidding some SOFI shares for my long-term portfolio. And also for some short puts and maybe some swing trades as the price action levels out and finds a local bottom and gives us a daily uptrend somewhere in that mix. But the volatility right now is just too strong to call this a bottom and say, yeah, I'm just going to blindly go long here, all in. Moving on to Uber right now. Uber. Why was Uber down 7% today? No news, right? Uber started off the day down like 2% when the entire market was green. That was already weird. This extra sell-off on Uber, extremely weird, but everything looked like this, man. This is just algos, getting rid of absolutely everything and anything in the entire markets, right? So that being said, Uber, we were noticing the break of structure yesterday with the break of support, broke down a little bit more, and now instantly back into my buy zone. Low 80s, 84 down to about 78 is the nice area of support, which we previously established as resistance back there. That is now your monthly consolidation, finally into the 12 EMA. So this area is an area that I will be playing Uber with maybe some long-term portfolio shares. Been waiting for it for a while. The past few months, I've been waiting for this to happen. It's finally here. So as a result, short puts for me down here, no problem at all, but also adding some shares for the long-term portfolio. Additionally, too, decent fundamentals down there in the low 80s. And last but not least, TSM, another stock that was very far from the 12 EMA. They had fantastic earnings. You remember we covered their earnings on the channel. Phenomenal earnings. Market didn't care, discounted it anyways. A few days ago, they showed us that they had insane pricing power. They're increasing prices 5 to 10% for the next 4 years. Market didn't care, discounted it anyways. NVIDIA had phenomenal earnings, and now the entire market came apart. So that's no fault of their own, but that is indeed a lower high. And if we head to a lower low and break these guys, 275, you are coming lower. Weekly also establishing some form of a weekly downtrend right now. Equal highs, low, lower lows, weekly downtrends in motion, weekly MACD crossing over as well. A lot of weekly MACDs are crossing over right now, so pay attention to that. Monthly, just looking for some consolidation. Next stop, probably, if the markets get really bad here, 250 down to 240. That'll be a nice sell-off, man. TSM's already down 10. What? With other names down 20, 30. You don't think TSM can actually fulfill the prophecy down here, going down 20 on their own if the SPY and Qs come down 7, 8, 9, 10? Probably it can. Will it be a phenomenal buying opportunity down there? Absolutely. Is it still a nice buying opportunity here? Yeah, but just don't get in the way of a freight train, right? With some short-term trades and also for some long-term portfolios, it should be like nibble, casual nibble, and here you should start, the nibble should start getting a little bit bigger because now you actually know you're getting good price support down there. And the fundamentals will line up with the technicals at the same time. You might find daily oversold conditions if you go down there a straight line, right? You'll find a nice weekly sell-off as well. People will be discouraged. People will say that's the end of TSMC, as if, guys, you know what I mean? So yeah, so that's pretty much everything that I had for you guys today. As I said, there's no use of going through all these names, guys. All these names are the same thing. Just follow what I showed you for everything. And it's the same thing. Whether you look at Robinhood, look, I mean, how extended were we? We've been talking about this for a while. People discouraged right now. Daily downtrend, weekly downtrend, right? Into the next area of support, which is almost the 12 EMA with better quarterly earnings that we've had. All of these are the same. Celestica is the same. Rocket Lab is the same. Micron is the same. SMR is just a disaster. That's not really the same. ASTS was the same as well. Oklo was the same. Look at all these charts on the monthlies. You don't even need to look further than the monthlies, guys, right? Mercado Libre, the same, but came a little bit further. Mercado Libre, one of my favorite names recently, man, to be buying some shares. So they flushed, but then again, they were kind of trading tight, right? And they tried their best to uphold it here. You can see they tried a few weeks ago, they tried to uphold this area. sadly, the market, the overall broad market is just too strong. So this one's having a bit of a pull to the downside, right? AMD monthly looks the exact same. CoreWeave is just a disaster right now. And so I'm just not playing CoreWeave at all right now, except for very long-term shares. NBIS, way too extended. Iris Energy, way too extended as well. CIFR, way too extended. APLD, way too extended. So you guys are getting the point, right? It's not them. It's the overall market. It's a deleveraging event, right? It's a liquidity event. You're not finding the liquidity to hold up these bids right now. Even Palo Alto Networks, which had okay earnings, they are even going into the monthly retracement form right now, and some of the other cybersecurity names too. CrowdStrike, look how far we were off the 12 EMA, right? It's a perfect pretext, right? Nobody would question a lot of these declines with all of the bearish sentiment catalysts that we have going on in the markets right now. So you should not be surprised if they really take, they take the further breadth out of the market, and they consolidate people's favorite names and even the names that people had as fan favorites, right? You consolidate those even more, man. Bring Palantir, Robinhood, and all those names down a little bit more. All the neocloud providers that people were up a ton on. People are just going to throw in the towel, man. They're going to say the AI trade is dead. That's it. That's all. The markets are dead. It's the start of a bear market. We're going into a recession. But not you guys. You guys now know how to filter out noise from actual signals and understand that normal market consolidation phases are just that. They're normal. They're healthy. When the market gets too frothy, too over-leveraged, the trades get too crowded, and you're already lacking market breadth, that is when the market makers and all these liquidity events can start playing games with you. You're carrying it in from crypto, all the stuff we said in our introduction, right? It's all various pieces of the puzzle. There's not one single thing that led to today. There's a combination of many things that have been building and building and building, which lead to a word that people don't like that I use sometimes, but it's the word uncertainty, right? Build up more and more and more uncertainty catalysts, man. And eventually, it's the straw that breaks the camel's back, essentially. And you get a day like today where you get a massive sell-off. Maybe the market makers, maybe the market makers started it, but eventually they forced liquidations and nobody stepped in. Nobody stepped in all day, not even in the morning, not even in the afternoon, right? And with the retail sentiment probably right now on the floor, I don't know if people will be stepping in until they find more clarity, and nor will the institution. So that being said, maybe you do have to take the markets a little bit further, but just notice that we are losing some weekly uptrends, something that hasn't happened. Many things are happening now that haven't happened in the last 6-7 months. So as a result, your trading should be different than it has been in the last 6-7 months. No more margin, no more short-term swing trades, no more trying to call short-term bottoms and calling bounces and stuff like that. Long-term portfolio positions, yes. Patiently waiting for big monthly levels to start leap call options, yes. But short-term swing trades should be kept to a minimum, and margin should also be kept to a minimum, guys. Don't get blown up. That's all I had to say for you guys today. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We'd love to have you back. We do these every Monday to Friday after the close. And last but not least, if you have any questions or comments or feedback about today's price action and what you think, definitely leave them down below in the comment section. We'd love to hear from you guys. That's all I had from you guys. Get some rest tonight. I will see you tomorrow after the market close. And in the event you wanted to join our trading and investing community and not trade the markets alone, do so within the context of a community where we share our opinions, we share our trade ideas, we share our short, medium, and long-term theses with each other in the group. You also get my ideas in real time. You can consider joining our group. The link to join our group is down below in the video description. In the group, you get access to all of my trades in real time and my thoughts on the markets, and when I put a lot of volatility and, heavy positioning on the table, when I taper back some of my trades as well, you guys get access to all of that in real time, whether it's the wheel trades, the call option trades, the short-term swing trades, et cetera, et cetera, et cetera. Every single trade I ever do, and all of my long-term positions that I ever make as well for my long-term portfolios, you guys get those whenever I make them. Additionally, you get access to our private morning live streams Monday through Friday. And we were streaming live all throughout today's session and explaining what was happening and how to properly position for it as well. You get access to our private morning live streams Monday through Friday, and we do it for about 3 hours at the open, 2-3 hours. I trade live and I take all your guys' questions on your stocks, your portfolios, and your long-term investments as well. If you wanted to ever ask me any questions, if you're caught, if you're stuck in some trades or whatever it may be, and you want my opinion, right, on proper, best practices or what we could possibly do in that situation. People always ask me in the live streams, man. I give really detailed explanations. It's a great place to interact with me, well, one-on-one, but in a group session. I'll answer all questions in the live streams. And you also get access to our private video education section. If you guys want to know how I do my technical analysis, fundamental analysis, right? Trading psychology, various trading strategies, the wheel, my leaps, call debit spreads, the swing trades, whole bunch of stuff, right? 15 hours of educational content that I won't put on YouTube is all in that section. You can also ask me your questions in our chat rooms throughout the day. I'm very fast to answer. And last but not least, you get access to all of my charts. Whenever you see charts like this with support and resistance levels on them, which I obviously update every single week, on new stocks or otherwise, right? And also all the fundamental breakdowns on, I don't know, like hundreds of companies in the market, you can just copy paste all my charts, all my watch lists, all that comes included. If any of that interests you, feel free to click the link down below in the video description. We would love to have you in there as I just come to join us. 300 other members trading the markets every day. We have a fun time, right? And we are also pretty patient in there too. And, nobody's a pessimist in there. We always look at things in an optimistic fashion overall. So if you wanted to join us in that group, the link is down below in the video description. Hopefully I see you in there soon. And if not, I'll see you back here on the channel. That's it for me. Have a good evening, guys. Cool head on your shoulders. No emotions. Just be stoic. See you guys tomorrow. Peace.